Welcome to our YouTube channel, Moneyline with Nancy TV. This is where you get the latest updates on business, finance, economy, market, as well as investment information. If you couldn't follow us live on television, please do subscribe to our YouTube channel. Also, press the notification bell so that you can get notifications. Thank you. Enjoy this video. Like I mentioned earlier, we'll be taking you through the Investors Forum that was held at of course, on the sidelines of the World Bank IMF Annual Meetings. The Minister of Finance and the Central Bank Governor did talk to international banks, investors, uh, one of those days and try to answer their questions. We also had a lot of people in the room. The Deputy Governor in charge of economic policy, Mr. Sani Abdullahi, was there. Another Deputy Governor of the Central Bank of Nigeria, Mr. Philip Ikeazo, was also there. We had the Permanent Secretary of Finance, the Director General of the Budget Office of the Federation, Director General of the Debt Management Office. We also had the Managing Director of MOFI, Dr. Armstrong. They were all in the room. We had some private sector players, even from Nigeria, coming. I cited Mr. Wale Tinubu in the room. I cited Mr. Falowo, the chairman of Greenwich, and a host of other private sector heads in Nigeria. But there were a lot of people in the room that were not even Nigerians, the JP Morgan Chase, the Standard Chartered Banks, the investment advisors, asset managers around the world were all there. But let's quickly take the presentation by Mr. Sani Abdullahi, the Deputy Governor in charge of economic policy at the Central Bank of Nigeria.
Some of the reforms that have been ongoing in Nigeria over the last year and a half to help us make sense of what might seem confusing from far away, but is actually quite a methodological process that the country is taking on to improve its economy and the life of its people. The reforms have been really on the back of very strong political will that's been exhibited right from the top by the president himself, and as much as possible in collaboration with the various stakeholders in the Nigerian economy. And it is focused as a first order on strengthening macroeconomic fundamentals and ensuring the restoration of growth, promoting effective and efficient public services and public goods delivery, and also creating a conducive environment for the private sector to flourish. The key objectives are to deliver sustainable and inclusive growth, moving to a gross domestic product growth rate of 7%, which by the rule of 7 sees us doubling the economy in 10 years, and lifting 100 million Nigerians out of poverty. So the presentation will focus on 6 areas: some of the reforms that have already been embarked upon, what's happening in terms of monetary stabilization, public finances, what's the growth story, and then what do we see in terms of oil and gas, and then what's the road ahead. The administration hit the ground running last year. As you all recall, the removal of 2 key subsidies that had held back the economy for over 40 years. And this was really outlined within the speech of the president on inauguration around the unified exchange rate and also the end to petroleum subsidies in May 2023. Since then, the fuel subsidy reforms, the exchange rate stabilization, and a significant revenue mobilization strategy has been unrolled, and a lot of monetary policy action decisively has been taken by this. It includes tax amnesty, improving the accounting and reporting framework, and repealing some suboptimal taxes that have hampered proper tax administration. So there's a lot of work on the revenue side really that's happening to ensure that we improve on gross non-oil revenue and revenue collection. Even though revenue to GDP remains low, there is a very concerted effort to ensure that this is improved in the short to medium term. In terms of the fiscal performance, we can see the fiscal deficit narrowing and improving, and there is a lot of work, and I'm sure that in the Q&A we'll also hear a bit more details around that. For public debt, in Q2 2024, the debt stock grew in terms of Naira to 134 trillion, driven mainly by the exchange rate devaluation, even though the dollar amount of debt was roughly the same. So it's not that there's new borrowing, but there's a huge pressure really because of the exchange rate devaluation. This is part of really the cost that we have to bear for some of these reforms. In Q2 2024, external debt accounted for 47% of the total, and you can see the breakdown with domestic and external debt. The composition of public debt, as put on the screen, federal government bonds dominate domestic debt markets by 78%, and external debt, which was composed mostly of multilateral and bilateral, at 50 and 13%, and then commercial loans at 35%. So what's the growth story? We can see service sector contributing 59%, agro sector contributing 23%, and industrial sector. Now, what we project over the next year and going forward is you will start to see some structural changes to our growth story, and that's because there is an underlying structural transformation that is going to happen, that we are working on to ensure that we, as much as possible, become an export-led economy, non-oil export-led. And so some of these numbers we're hoping will be able to reflect that. As I mentioned, if you look at the green, which is very important, you would see that for the past 3 years, oil sector has been in the negative, right? But from Q4 2023, this has now become positive, and this means a lot, because once we're able to sort out the immediate liabilities that the oil sector has, then we can see significant amount of growth that will come from improvements in production, that will come from new domestic refining capacities, and all of that will then end up really improving our fiscal position and overall economic position. So the growth now is at 3.19%. As I said, what we project is trying as much as possible to move the economy to 7% of growth, and there is a lot of work going on with that respect. This is the growth outlook, the pessimistic business as usual, and then the optimistic pathways for growth, and we are forecasting as much as possible. We are seeing improvements in crude oil production. We're seeing sustained growth in services sector led by finance and insurance. And then, of course, we're also taking into consideration some of the risks of our growth outlook and updating our numbers as we compare with other estimates from the IMF, World Bank, Federal Ministry, and then the CBN. So in terms of the oil sector, there's a lot of work that has really laid the ground for some of the changes that you're going to see and some of the improvements from the transformation of the NNPC to some of the reforms that happened in recent years, but really now allowing these regulatory frameworks to actually work and releasing them from the shackles of the subsidies are going to make all the difference. In terms of production, we're seeing improvements in crude oil and condensates production. Average production in the first 9 months was 5% higher than the same period in 2023. There's an improved security environment. Illegal combatants, illegal residents are being removed, and the use of private security contractors, increasing collaboration with government security and intelligence agencies. There's this regular meeting that the various security chiefs are holding, much more coordinated now, that really addresses the issue of oil sector security, and this is something that reports to the president himself, and so there's a lot of focus, and you can see that that is yielding some fruit immediately, and we think that with this side by side with maintenance and repair of infrastructure in the oil sector, would continue to see some of these improvements over the next couple of months and years to come. In terms of the refining capacity and efficiency, Port Harcourt Refinery, old and new, are undergoing rehabilitation. Warri is undergoing rehabilitation. Kaduna is undergoing rehabilitation. And then we have the brand new, shiny Dangote refinery, which also has some significant impact, especially on the import side, where 30 to 40% of our import bills would then be domesticated and would not have that pressure on the FX. So there's a lot happening on the oil sector, which also has significant positive upsides for the economy. In terms of the road ahead, and I believe this is the last slide, we still do face some challenges. The biggest challenges are the impact of the reforms on people and business. Businesses are crying and shouting high interest rates. People are talking about the cost of living, and these are things that need to be addressed so that we are able to go through the bridge of the short to medium term. Low revenues still as we continue to ramp up and side by side with this high debt service costs. These are the realities of today. Elevated inflation still and food insecurity, as these are still transition periods, and then subdued levels of oil production. We're still not where we want to be, but we are getting there. It's a journey, and it's a journey that has started very strongly. So in terms of commitments, is to prioritize the palliatives, ensuring that the investment in the social sector actually reach the poor and the vulnerable, improve the sequencing of reforms. A lot of it happened at the same time, and now we're really looking together with the fiscal and the monetary side on how to really pace it and sequence it a bit more. So enhanced frameworks for fiscal and monetary policy coordination, ensuring this focus on raising non-oil revenues, strengthen the business environment and investment climate, and overall ensuring that there's a key focus on tackling insecurity, which affects not only the oil sector but also the non-oil sector.
Welcome back. So at this point in time, you've listened to the conversation. Let's quickly now take the questions and answers. You'll be taking a look at some of the questions that were asked and how the Minister of Finance and the CBN governor answered.
Nick Bradford from Kirkoswald. Two very quick questions. The first one, I think since the new administration came in, there's been a lot of talk on, well, we get the gross reserves, but what are the net reserves? And so I think there's been some talk around releasing that data. I'm just curious if there's a timeline on net reserves. Also, like your slide showed, a very impressive build-up in gross reserves, roughly $7 billion or $8 billion. Is there a level at which you don't need to build them any further? You know, in the recent times, there's been some FX pressure. There's been a kind of market narrative that there's been some sacrifice of the FX level in order to build reserves. So I'm just essentially asking, is there a level of gross reserves that you're aiming to achieve where you would be happier?
In the room, maybe echoing some of the other questions, the questions really are for the central bank. Just want to understand better your reaction function. I heard the comment that you're only 5% of the intraday liquidity in the market, but what's the thought process around intervention, dollar buying? How should we think about this going forward? Thoughts on effects?
Can you elaborate on the $1 billion that was referred to in terms of supply to the market? So it's a bit of a extension of that former question, but also the level of dollarization in the banking sector. My understanding is that 40% of deposits are in dollars, and overall, I'm led to believe that there's still strong demand for dollars from local Nigerians. So despite the fact that the Naira is perceived to be cheap, it seems that there's still very strong demand for dollars and the conversion of Naira into dollars for savings. Can you speak to how you imagine that local Nigerians will regain confidence in the Naira and perhaps look to convert some of their own dollars back into Naira?
My question is, with the removal of the fuel subsidy this time, is there a mechanism going forward for the pricing of fuel? Will there be? And related to that is, are you seeing, I know this it's just really been removed, but it has been in process over the last few months. Have you seen a corresponding increase in your revenues with the remittance from NNPC? And if not, why not? Because I know NNPC seems to have other encumbrments that may prevent this full remittance. And I'd like to know what those are and whether you're seeing that. Thank you.
And then my second question is just on the external financing projections and envelope. We've obviously seen a lot of World Bank concessional support. We've seen the diaspora bond, But I'd love to hear your thoughts on market issuance and how much willingness there is to engage in that.
Thank you very much, and I want to echo Jackie's comments and extend the congratulations on the reforms that have been implemented so far. Rukayat, you stole my question, so just to reiterate it, would really love to understand the supplier arrears that NMPC owes, refined petroleum suppliers. And then my second question is on the fiscal. I think you highlighted gradually increasing VAT from 7.5% to 15%. Just any clarity on how you plan to phase that, the timing would be very helpful.
Diesel is willing buyer, willing seller, market-based. Kerosene is a free market pricing. Jet fuel is free market pricing. And now petrol is the same. So we have local refiners, we have refiners locally that are able to buy crude in Naira. At their margins, they refine and they sell in Naira. And that is the market that we have now. Importantly, we can say that it's the first time in maybe 40 years that we have had that. It's taken tremendous, not just boldness and courage, but determination. And not just determination, but no small level of skill, consultation, and so forth. And the idea is that there is determination to maintain market pricing of petrol. And of course, what that will mean is that the wasteful and the inefficient and costly 5% of GDP that was flowing out of Nigeria to the benefit of a few people and surrounding countries will now be available to develop and modernize the Nigerian economy. In terms of NMPC and their situation, clearly the reality is that although the subsidy on May 29, 2023 was removed and was no longer on the balance sheet of the government, so to speak. It did rear its head, not in terms of petrol subsidy, but foreign exchange subsidy, which clearly was borne elsewhere and borne mainly by NMPC. And I think what I can say about their own situation is with where they are now, they have a route to paying down their payables. And I'm sure that in no time at all, they will start. And from what I understand, they have even commenced that process of paying down their payables. FARA management, I think I've done that. Oil sector distressed. External financing. Clearly, the major macroeconomic reforms that were undertaken, the cost is, as we know, is front-loaded. You get inflation immediately, and the benefits are now spread over time. And in the meantime, you do have to keep going. And there has had to be, apart from domestic resource mobilization, apart from what we have done internally to raise government revenue and limit expenditure, we've also been in the market. Number one, for concessional financing. The World Bank, amongst others, has believed and bought into the sincerity and commitment to reform, and have supported us with development policy, operations, budgetary support. And in addition to that, we've tapped what we all know is that Nigerians living in Nigeria are holding dollars. They hold them abroad. They hold them in Nigerian banks abroad, foreign banks abroad. And of course, we have a large Nigerian diaspora. And so we did, using the framework, the regulatory and the administrative framework of the Nigerian financial system, raised nearly $1 billion in that way. And of course, the financial markets, as you know, the commercial markets, the bond market, does remain open to Nigeria, as well as other developing countries have tapped earlier this year. And so we always have that as an alternative. And I think in terms of VAT, the commitment of President Bola Ahmed Tinubu is that while implementing difficult and wide-ranging but necessary reforms, the poorest and the most vulnerable would be protected. And in the case of VAT, it's a very, very efficient tax, as we know, for raising funds, but it's also, you can target it. So the bills going through the National Assembly in terms of VAT will raise VAT for the wealthy on luxury goods, while at the same time seeking to exempt or zero rate VAT for the what would I call them, for the essentials, and for what the average person, what the poor and the most vulnerable would purchase. Those items will single them out and zero rate them, exempt them from VAT, while definitely hitting luxuries with the higher rate of VAT.
First of all, thank you very much for meeting with us, Your Excellencies, and for the plethora of reforms that you've done so far. My question is on fuel subsidy removals and the impact on inflation. Did the September print include some of those removals? We did not see the breakdown on Deji's presentation. That will help us understand where the next print would come and the trajectory of rates going forward. And my second question is, Governor, you talked about harmonization of effects. I'd like to have you talk about harmonization of interest rates. There's a bifurcation of interest rates between the OMOs and T-bills. There doesn't seem to be a coordination of policy between Finance Ministry and the Central Bank.
I just want to ask that now that we have removed subsidy for over a year now, do we have a concrete data that shows the subsidy, had been utilized, that has improved the social sector like health, education? Because I know government channel those money to state. Has the government got any data to show that there's improvement of Nigerians' life as a result of removal of that subsidy? Secondly, is it possible to completely remove subsidy in all aspects? Because I've seen here in the United States, in various countries where even they are producing oil and countries that are not even producing oil, they still support their citizens, whether in agriculture or in transportation or even in the pure. Is it possible to completely remove all those things? And, you think, is that okay? Thank you.
Thank you. And just remind us which institution you're from, please.
Well, I'm a Nigerian. I'm the head of... I'm the Executive Director of Civil Society Legislative Advocacy Center, CISLAC, and also Head of Transparency International. And I'm also the Board of Chair Trustee, Amnesty International in Nigeria.
I have a couple of questions. The first one is the current account surplus was very impressive in Q2, but I'm curious about the errors and omissions, which was a fairly large offset. If you could give any color on what is driving it and how you intend to improve it. And the second one is just being in DC, I have to ask, any conversations with the IMF, getting them involved or getting concessional financing from the IMF?
Philip Ham from JP Morgan Investment Management. Sorry to push this question, but on the NNPC, so we have seen and heard that the NNPC has been in the markets and buying dollars, and this has presented a constraint because, they're buying the dollars in order to pay back some of these, the stock of their oil importer arrears. I guess one way to do it is, the market, there is excess FX availability now. So over time, this stock will be declined just naturally via the markets. But another way to do it is that this may take a long time is to, have a discussion or negotiation with NNPC to see what the stock of this number is, and maybe to have a means to do a larger sort of, a switch with NNPC. So I guess my question here is this conversation happening? Is the NNPC being transparent about these figures, and is there a communication going on this topic? Thank you.
But on the fuel subsidy removal, I think I'd said earlier that essentially it's October 2 that we had a situation where the major subsidies costing 5% of GDP, petrol subsidy and related foreign exchange subsidy, were effectively removed through a move to market pricing of petroleum. What that has meant is that it is really from then that you can look at accruing what exactly are the gains from removal. You can't have the gains from something that disappears from one place but rears its ugly head in another place. So I think it is going forward that we can be confident and we can be sure that a huge dividend is going to come to Nigerians for having the determination collectively to decide to move away from a wasteful, costly, and inefficient regime of pricing of major items, petrol and foreign exchange. In terms of conversations with the IMF, we're members, we're on the board, we're governors at the World Bank and the IMF. It is one Bretton Woods grouping. And so we have, naturally, we have obligations, we have governance roles to play. And in addition to that, as I mentioned earlier, as bona fide members, we draw on concessional finance. What we have from the World Bank, I just mentioned that they agreed with our macroeconomic reforms and have supported it with budgetary support. It's 1% financing for 40 years with 10 years moratorium. It doesn't come much freer than that. In terms of the IMF, we have what happened during COVID that everybody was credited. So like everybody else, we have funding that was just done by the IMF in their role as the commitment and responsibility for stabilizing the international financial system. They credited everybody. Apart from that, apart from money, and I think I mentioned it earlier, the thought leadership, the technical assistance, the advice and information and data that these institutions are able to provide is of value. You don't always have to take their advice. The IMF said to us that we shouldn't do a domestic issuance of dollar bonds. We did it and we were 100% oversubscribed. But we still valued their viewpoint and took it into account. Thank you.
Yes, thank you very much. The question as to whether the last MPC took cognizance of the fuel price increases, the answer to that is yes. And we obviously had to do so because we predicted that situations would get a little bit more tricky. And so to anticipate that and to sort of moderate the effects of this, we decided to increase interest rates at the time. With respect to OMO and the differentials between OMO and the T-bills, really the yields from OMO reflect target levels, and we are issuing more in actual fact to ensure that the transmission mechanism works as we expect it to. The divergence from the T-bills, quite frankly, is a response to the markets, and over a period of time, those should, I imagine those should adjust as we expect them to. The NNPC buying dollars from the market and whether we're having conversations with them. Well, the NNPC is a customer like any other, and we obviously cannot talk on their behalf. All we can do is, as we would with any customer, discuss issues and, of course, offer advice. What decisions they decide to take are entirely theirs. So whether they are buying dollars on the open market or they are buying from somewhere else, really, we are their bankers, and that is their decision to make.
I had a question on fiscal performance in 2024 and questions about, what shape the 2025 budget could be, if you could talk to that a little bit.
Revenues, budget deficit of 6.5%, we've got it down. So far in the first half of this year, the debt service to around 60% or so of revenues, which is still eye-wateringly high, but we're coping with it, and by prioritization, of course. And in terms of the other aspects of fiscal policy, the budget deficit is down to around 4.4% of GDP, down from 6.1% the first half of, or in 2023. That's where it ended. So by the first half of 2024, it's down to 4.4%, and the target for the year had been 4%, and we're still hopeful of achieving that. In terms of, we do have the director of the Director General of the Budget Office to speak on the 2024 budget to the extent that you want to hear.
Well, revenue-wise, we are really doing a lot better. Budgeted performance as at August was 13.1 trillion naira, and actual performance was 12.6 trillion naira, which gave us a deficit of about 500 billion naira. So aggregate revenue target was missed by 3.6%. So we're doing really well.
This was very useful. Name is Ashwin Vasan, MKP Capital. I was recently in Abuja visiting the team. First question is, you presented a lot of fiscal plans that you are planning on implementing. Is there a target of non-oil revenues, tax revenues as a percent of GDP that you have in mind as you implement these plans that we should be looking to in terms of understanding how this program is really performing? That's number one. And Governor, you forgot to answer the question earlier about what the errors and omissions line in the balance of payments represent.
In terms of the fiscal targets and in terms of revenue, clearly, as I think I said before, charity has to begin at home with domestic resource mobilization. Government has to have enough revenue to do its bit to provide core social services, to provide basic infrastructure, which now creates a basis for the private sector, and whether domestic investors or foreign investors to now come in and to invest and create jobs. So where we are, or where we have been, is that we met tax to GDP at 10% or thereabouts, and our target, and we have a fiscal policy and tax reform committee that has set a target of 18% of GDP tax revenue as a percentage of GDP of 18%, and overall revenue to GDP of 23%, to take it up from currently around 13, 14, 15%, to take it up to 23, 25%. Those are their targets. Those are what they are aiming at, and they have a slew of reforms, including changes to the tax code that will help to drive that, help to achieve those targets. And above all, it is the overall macroeconomic reset to stop the hemorrhaging and then build up the revenues and add on the investment, the results of investment, which is tax revenue from the profits of companies. That is the overall strategy of getting Nigeria once again on the path to rapid, sustained, and inclusive growth, which is the President's strategy, his objective, and his commitment.